Good afternoon, everybody. I'd like to welcome you back to the Shifting Sands Conference 2014. This is our second session of the day. For those of you who don't know me, my name is Dr. Tracy Fenwick. I'm a lecturer and a research fellow at ANCLAS. If you haven't, just a quick reminder, if you haven't signed our list at the back to be on our email list, please do so. It's very important that we can continue communicating with you. So I'm going to go straight ahead to introducing our next presenter. We are very fortunate today to have Mauricio Medinaceli come speak to us. Dr. Medinaceli is an academic and a consultant and has consulted with the World Bank. But most importantly, he is a former minister of hydrocarbons from Bolivia from 2005 to 2006. And he has arrived from La Paz yesterday, I believe, and is just here for a quick 24 hours. So we are very privileged to have him speak to us today. And he is going to be talking to us today about the international oil price boom in Latin America, Bolivia, Chile, Colombia, Mexico, Nicaragua, and Venezuela. So with no further ado, I'll turn it over and we'll have a great 40-minute presentation. Thank you.
Hope so. Okay, thank you, Doctor. I want to thank to the university. I want to thank to Madeleine, because thanks to Madeleine, I'm here. We had an opportunity in Peru, 2012, I think, to depart in the Peruvian university. I was teaching there some oil class. Also, thanks to John for the invitation, your kind invitation, and also Claudia, because without Claudia, I will not be here. From La Paz, it's about 2.5 days of traveling. I depart from La Paz on Saturday, and I am going back to my country tomorrow in the morning. So, but one another thing, my English is not so good, but there's a lot of Spanish speakers here, so por favor, denme una mano si ven algo extraño. Give me a hand if you see or listen something strange. My presentation will be more focused, not so, I hope, good enough as Anthony. And from Anthony, I want to say that it was a word in Spanish, a very particular word that conflictólogo, which is the person who is creating a business when he analyzes the conflicts. So this is the type of words that I will try to do some focus. My presentation is, this is the list of the outline. In the first part, I will explain why these countries, why Bolivia, Mexico, Nicaragua, Chile. In the second part, we will analyze, or I will present to you the behavior of GDP and GDP per capita. And in the third part, the model and the results, some econometric model that I will not explain here, only the results is the important thing. The fourth part will be a case study with Bolivia, because I am not traveling here 3 days only to talk about econometric results. I want to talk with you about the political implications, the social implications of this oil price boom in Latin America, especially in the producer countries, which is Bolivia, one of them, and the main conclusions. And at the end, after the point number 5, there is an animation to show you about the Latin American economic experience. Okay, the countries. There are 6 countries, Mexico, Colombia, Bolivia, Chile, Venezuela, and Nicaragua. Why these countries? Because these countries, the 4 in blue, I mean Mexico, Colombia, Bolivia, and Venezuela, are oil producer countries. So that's why the common thing between these countries are they get benefit when the oil price is going up. And in the other side, there are countries like Chile, Nicaragua, Costa Rica, El Salvador. There are many countries in Latin America who are which are importer countries. So as a net energy importer countries, they suffer a lot when the oil price goes up. So there is a conflict inside Latin America with the oil price. While a group of countries get benefit, another group of countries get worse when the oil price is starting to grow up. So I want to test this hypothesis because the hypothesis behind these oil boom prices have different economic impact over countries in Latin America. So I want to test my experience, what I saw in OLADE. Let me talk about this. I worked in Ecuador for about 2.5 years in an international institution which is called OLADE, Latin American Organization of Energy. I was the hydrocarbon coordinator there, and I saw this problem. When a country wants to sell oil inside Latin America to another country, there is a big issue here about the oil price level. Because, of course, the producer countries wants the higher oil price, and the importer country wants the lower oil price. Many times, they get the business using the international oil. But we can imagine an intermediate oil price, not too high, not too low, so they can agree in a price like this. The problem with this is the political risk of this type of agreement. And I will explain the political risk doing some energy agreement after the econometric results. First, I want to test if this is true. If there are two types of groups in Latin America. So let's review. This is the GDP growth in Bolivia, and in red is the average GDP growth in Latin America and the Caribbean. And the next one is Chile. As you can see, look at here, two crises at the beginning of the previous decade, and this little one in 2009. The economic performance of Bolivia is close similar to the average in the region. Here we have Chile, also one crisis, the second one. This is the 2009 international financial crisis. But in this period, you can see the Chilean economy was above the average. So Chilean people was doing well in an economic perspective. Here we have Colombia and Mexico. Again, we have one crisis, the second one, and the one crisis more or less here, and the second one here. So these two countries are close similar to the average region, the GDP growth, and especially Mexico suffer a lot here because they devaluate the national currency a lot. Okay? And we can see here the next two countries, Nicaragua and Venezuela. You can see here the first crisis and the second one. And in Venezuela, we have three periods. I mean two. This first period when the oil price was $20 per barrel, and the second one when the oil price was about $100 per barrel. So Venezuela is very dependent of the oil price behavior, the international oil price. But as you can see, Latin America is very exposed to the international economic crisis. All the countries will share the problems and the booms, of course, but not in the same way. For example, in the period 1991-1998, you can see the average in red, the other countries, and Chile with economic growth more than twice than the other countries. So Chile, a lot of institutional reforms, a lot of changes in the economy made the economic growth in Chile almost twice than the average in the region. But in the crisis, 1999-2003, all the countries were with a more or less 2 to 3% average annual growth. And also, you can see Venezuela there, minus 3.1 because the international oil price was about between $10 and $20 per barrel. So Venezuelan people was very concerned about the oil price. Now, the boom starts more or less 2004, and now we are in 2012. The average growth in Latin America is 4%, more than these two previous periods. And you can see Venezuela, Colombia, and Bolivia with the highest economic growth. And these are producer countries. So we can see that not all the Latin American countries benefit from the oil price boom in the previous years. Okay? If we see in per capita, the GDP growth is more or less the same behavior. So no problem with that. So what's the model? The model, what I want to test is the main factors behind the economic growth. According to some econometric papers, we see that the capital formation and the GDP growth, it has a positive relation in the countries. And also the government expenditure and the per capita GDP annual growth, a negative relation. This is the situation in the 6 countries. Okay. This is another indicator of export plus imports regarding the GDP, a positive relation. And this is the terms of trade relation with the GDP, also a positive relation. I will pass this very fast. There is a negative relation between literacy rate and the economic growth. The more the literacy, the lower the growth. And the devaluation also have a negative impact over the economic growth. Good. Because we are very sensitive to the international crisis, we see a positive relation between the economic growth in the 6 countries with the USA GDP growth and China GDP growth. And also, we can see the export prices, they have a positive relation with GDP growth here. The more the mineral price, the more the GDP growth. And also there is a positive relation with gasoline and diesel oil imports. Good. Regarding the oil price, we can see a positive relation between the higher the oil price, the higher the GDP growth. In all the 6 countries, in the producer countries, but also in the importer countries. So we have to use econometric technique to separate the effects. So I do my homework. I will not explain that. This is only to show that I did something. Ordinary least square technique and the fixed effect techniques are not very good. So I used this technique. We can discuss later. No, that's not the big thing. Okay, this is the final regression. So I want to share with you these results because these are the good ones. USA was not important for these countries in the past 20 years. No. The China growth was what affected in a positive way to our countries. And how is the relationship? It's very easy. Chinese people eat more. They demand more electricity and fuel. They demand more oil. The demand of oil goes up. the price goes up, so Venezuela, Colombia, Bolivia, they sell the oil with more a higher price, so they get some benefit. So the China economy helps a lot to the Latin America economy. Also, the devaluation has a negative impact, because once, for example, Mexico, Brazil, and Argentina devaluate the national currency, all the countries goes down, especially the small ones like mine. The education also is important. The more educated the people, the more the economic growth. That's good, especially in Chile. There's some person from Chile here. The government expenditure also, it has a negative impact. The most government expense in the economy, the lower the rate of growth. Inflation, a positive impact. Investment also, oil production and export plus imports. But the real fire is here. The real fire, you can see, Bolivia, Colombia, Mexico, and Venezuela, they have positive coefficients, which means when the oil price, when the international oil price goes up, the economic growth also goes up. But with Chile and Nicaragua, which are importer countries, the relation is negative. Why? Because they have to pay more for the imports of oil. No? So the increase in the international oil price is good for the producer countries and is bad for the importer countries inside Latin America. So not all the countries in Latin America are the same. There are the producer ones and they are the importer ones. The importer ones suffer a lot when they have to pay more for the oil. And the producer ones, they benefit with more oil price. But I will try to explain this about the political risk about this one. For example, I am the president of Bolivia, no? And I want to sell my oil to your country. I don't know the name of your country, but your country. And the international oil price now is about $100 per barrel. And we can say, why don't we agree in a price of about $60 per barrel for about 20 years? That would be good. Because you are paying me $60 per barrel for 20 years, and we avoid all these ups and downs in the price. Seems a good arrangement. Okay, we made the deal. And when I go back to my country, the political party, the opposition political party, will say, you are selling the Bolivian oil to this country at $60, when the international oil price now is $100. So you are selling our oil because you are doing some corruption act. I am clear with that? Okay, so that's, but yes, okay, but people, I can say as a president, people come down. When the price goes down, we will get $60. Okay. You go, as a president of your country, you go to your country. And when the price goes down, the opposition in your country will say, okay, we are paying $60, and the international price is about $40. So you are doing a corruption act. From my experience as a minister, from my experience in the government, dealing with Congress people, dealing with opposition parties, this is the type of problems when you want to do an energy integration process. The opposition party is always creating problems because they want to do one thing, get the power and maintain all the time they can. So it's very difficult in Latin America to get an energy integration process between two types of countries. the producer ones and the imported ones. Because, as you mentioned, and I agree with you, behind the natural resources industry, there is a political party project. There is a political project. And what they do, these politicals, these parties, they take the oil, they take the money, the mining, they take one natural resource as a flag. And they always want to say, okay, I am defending the natural resources. And with this flag, I am saying all the neoliberals, all the pro-foreign investors, they are bad for our economy because I will defend my country against these crazy Americans, Europeans, investors. So that's why it's very difficult inside Latin America, from my perspective, to do some energy business, because we have two types of countries. And also, there is a political risk inside to negotiate a price. Okay. So this is what the econometric model tells me. When the oil price goes up, also the GDP grows in the producer countries. This is always good, and the answer is no. The greater the GDP is not always good for the social indicators. Again, is not the GDP indicator is not a good one. It's not the only one to understand the social dynamics inside the Latin American society. And I want to do something with you. I want to share the Bolivian case study in order to test this hypothesis. This is the production in Bolivia. As you can see, in 2000, we produced less than 10 millions of cubic meters per day, and now we are producing more than 50. The main market for our natural gas is Brazil. We are selling most of our production to Brazil and also Argentina. Let me tell you about the project with Brazil. The project with Brazil started in 1974. 1974. And the end, or when we sent the first natural gas volumes, was in 1999. So our agreement between Bolivia and Brazil was about 25 years of negotiations. 25 years of several presidents in Bolivia and Brazil dealing with this national project. And at that time, between 1980s and 90s, in Bolivia and Brazil, we have a lot of neoliberal governments, the bad ones, the evil ones, the pro-capitalism governments that we were selling all our natural gas resources to the Brazilian imperialists. That was the speech 20 years ago. But good or bad, evil or not, angel or evil, this is the reality now for my country. More than 80% of the production is selling to the Brazilian and Argentinian market. Okay? So we are selling a lot. And also, we linked our export price to an oil international price. So our export price, our natural export price started in $1 per million BTU, and now we are selling at $10 per million BTU. So our price, our export price, is 10 times more than 10 years ago. So in Bolivia, we are with a lot of money. Not only the volumes of natural gas, also the price. So the cake, it's a very big one. The cake is a big one. And this is a joke I always use, but it's unfortunately for Latin American people. There's a famous character, El Chavo del Ocho, And when you give to the Chavo del Ocho a big cake, because it's a poor kid, this poor kid eats everything, no matter if tomorrow he will have a stomachache. So we are having the same problems at all the natural resource course we are experiencing now. I want to explain why it's happening. Okay, so the cake is growing up, and in 2005, Bolivians created a new production tax, el IDH, the tax to the production of hydrocarbons, a production tax. About 32% of gross production, plus the 18% of royalties. In Bolivia, we have the biggest royalties in the world, 50% of gross production. If you say something like this to the companies that are working here in Australia, the companies will say, okay, the Bolivian people is crazy, because the average royalty and production tax in the world is about 20-25%. 50%. It's really too much. But, okay, that's good. We did that because the cake was so big. No matter. This tax was created in 2005 in the Bolivian style. And how is the Bolivian style? Very Latin style. How is the Latin style? Very easy. The price is going up. So somebody take this as a flag, political flag, and they started to say to the people, okay, the price is going up, we don't have money, the neoliberals, the companies, the private companies, the foreign investors, they are the evil, so we have to go to the streets. We go to the streets, a lot of people die in the streets. For this tax, about 100 people died in Bolivia. We finally get the tax, and the companies pay the tax. Okay? So this is the Latin style, which means that the Congress is not working very good. Okay? I am not a political analyst. I am explaining to you, telling to you how the hydrocarbon sector, where I belong, is something related with the political aspects. Okay. So this production tax, you can see, plus the royalty, it's about 10% of GDP. What I am talking about, only this tax explains all the economic growth in Bolivia in the past 5 to 6 years. This is the main tax in Bolivia, created 1 year before nationalization. So, what Evo Morales did? Evo Morales is a very intelligent person. It's my president, but I am not agree with his politics. But he's a very intelligent, and he has a lot of good things. But Evo Morales, what he did? He said to the people, this tax is thanks to the nationalization. False. No. This tax was created 1 year before. But, okay. So in Bolivia we have more volumes, more price, and additional tax. So a lot of money. And what Evo Morales told to the people is this all economic growth is thanks to the nationalization. Okay? So the public perception about nationalization is that thanks to the nationalization, we have a lot of money in the country. Okay, this enforces your theory about how the political aspects can touch very technical topics in the hydrocarbon sector. Okay. Evo Morales had lucky, which is good, because he represents about 50% of the Bolivians of indigenous people in Bolivia. So it's a good thing. Evo Morales is a good thing. But my wife is pro Evo Morales. I am a neoliberal. So we don't discuss politics at lunch. But she told me, and it's real, thanks to Evo Morales, the indigenous peoples can have now administrative, political situation, political work. Before Evo Morales, no, because Evo Morales represents all the indigenous people in Bolivia. But because I'm the evil guy, I'm the neoliberal, I said, okay, that's good in a social perspective. But from an economic point of view, we can do better with the money that we have with natural gas. And why I say we can do better? Because of this. Okay, this is the crazy thing about the 50% royalty and production tax in Bolivia. I invite you to show this graph to the Australian oil companies when they are complaining about how high is the, if they complain about how high is the tax in your country, you can show this graph. And you can say, go to Bolivia. But, okay, I did with some 1 or 2 years ago, a micro-macro model for Bolivia. For the econometric students, maybe you will understand what I did. No, I will not explain this technique. What I did is see what happened in the economy when the hydrocarbon sector is starting to grow up. And what happened is something like this. This is most illustrative. In terms of GDP growth, this is very important. Okay, it's not only happy faces. There's a lot of econometric work behind. When the hydrocarbon sector in Bolivia grows at 5%, there is a lot of impact on the GDP. When the mining sector grows in Bolivia, there is an impact, but small. So the hydrocarbon sector has a lot of impact in economic growth. But when the hydrocarbon sector grows, the poverty increases and the inequality also. But look at this. When the rural agriculture grows, there is a small impact in the economic growth, but there is an improvement in poverty, and there is an improvement, or there is not a damage in inequality. So this is a very fascinating result. Not all the economic growth means an improvement in social indicators. As you can see here, the growth in the hydrocarbon sector can promote an increase in the poverty. So, which is the channel to what is happening? The Bolivians are crazy? Not too much. What happening is this. More demand from Brazil and Argentina from our natural gas associated with higher oil prices increase the natural gas Bolivian exports. Okay, Bolivian export grows. More Bolivian exports of natural gas increase the value of production of natural gas. More value in the production of natural gas increase the taxes to the production. More taxes in Bolivia imply more public investment. More public investment, what it implies? More public investment, the local governments are doing roads, the local governments are building schools. So there are 3 sectors which benefits with this money. The construction sector, the transport sector, are the formal services. I mean the bank. Okay? So the internal demand is going up, the prices, the inflation is going up, and the rural farmer confronts the inflation and he doesn't get the money from the gas. So that's how poverty increases. The public investment is focusing in the construction sector. And in the construction sector, who is working there? The middle class, not the poverty ones. The poverty ones are in the rural areas, and they don't get the direct benefit from the natural gas export. So that's why the hydrocarbon sector is good for economic growth, but maybe not too much good for inequality and poverty. I'm clear? My ideas?
Yeah.
So what's happening in my country? What is happening is we are growing up. The social participation of people is good, but there is the change in the inequality and poverty is not too big. We have several data that government data that are telling you that we are less poverty now, but this is in the average. Because the rural people is not getting better with natural gas. So there is plenty of room for public policy to improve the use of natural gas export to Brazil and Argentina. Because otherwise, when the price goes down, the owners of the construction and transport and banks will go to Miami or Europe, maybe Australia, I will be here maybe. And the rural farmers will stay in Bolivia because they don't have the opportunity. The middle class has benefit in Bolivia from the natural gas exports. You see one of these guys here, because I was working in Afghanistan about 1 year. 1 year I worked in Afghanistan 1 year ago because I know the natural gas business because of this project of natural gas. So for small economies like Bolivia, one project can do all the difference. It's not like, we are not talking about USA, we are not talking about big economies. We are talking about Latin economies. And Latin economies, not Brazil, not Argentina, not Mexico, the other countries, the small ones, for the small ones, one project can do all the difference. Yeah? Okay. So main conclusions, not all the countries in Latin America are equal. I mean, we have producers and we have importers. The producer countries benefit from oil price boom that generates a higher GDP growth, but not always a high GDP generates a good social indicators, as I tried to explain it before. Now, I want to share with you this graph. We have the per capita GDP and per capita energy consumption. And we have 4 areas. High GDP, low energy consumption, a good one. We are growing up with low energy consumption, high GDP, high energy consumption, not too good. Low GDP, that's what the ugly face. Low GDP and high energy consumption. This is the worst place because you are not only poor people, also you are consuming a lot of energy. Okay. So these were our countries in 1970. The size of the bubble is related with the population. So the biggest country there is Brazil, as you can see in yellow. And the poorest country was not Bolivia, was Haiti. Here, 5 minutes, okay. So here's Ecuador, Brazil, Mexico, Argentina. So there is a positive relation. The more the economic growth, the more the energy consumption. So let's see what happened in Latin America in the past 35 years. As you can see, in the 70s was an increase in economic growth, especially in Venezuela, especially in Colombia, because the oil price increased the GDP. But in the 80s was a decrease in the economic because of Mexico. There's international crisis in Latin America. But after these 80s, a lot of institutional reforms, especially in Chile. You will see Chile from here to here, started to increase the GDP in some countries of Latin America. In the 90s, some countries we were doing bad, some countries were doing good. And in the 2003 and 4, most of the countries started to grow up. I mean, the biggest one. So what happened in Latin America after 35 years? There is a group of countries that still remains here, and other countries are here. My country is here. But what I'm trying to explain here, that the gap, in 40 years ago, the gap was between Latin American countries and Europe. The gap was between Latin American countries and USA. Now we have an internal gap between Brazil, between Argentina, between Mexico, and the other countries. So for Bolivians, for Ecuadorians, for Ecuadorianos, for Costarricenses, for Nicaraguenses, will be most expensive to go to Brazil than to go to Europe. Because there is a lot of, the economic gap now in Latin America is increasing. So there is an issue here for Latin American countries to have an integrated economic process. Otherwise, I will end with this. There is two types to stop migration. One type is to create a wall in your country, the other bad ones. So in this wall you put a lot of police, army, and the other one is to, you cannot create a wall, you can generate homogeneous and economic growth in the other countries in order to stop immigration. So this is a call of attention to Brazil, Argentina, Mexico, and Venezuela. Don't see also the Asian markets. Don't see only, the Asian market. Don't see only the American and European market. Also you can see the backyard. Because in the backyard we have very poor brothers that if you don't do something, these poor brothers 10 years ago will generate problems to you. Okay? Thank you very much. 20 years ago, when the export project was negotiated between Bolivia and Brazil, the opposition in my country was telling, no, in Brazil there are the bad people, evil people. Okay, so what the government did? The government said, okay, come on, how much? How much? Not the money. We have to convince you. They explained all the project. They offered some ministries. They offered some positions. There is a kind of lobby, not only in the society, also with the political party opposition. So at that generation, everybody was happy with the type of agreement. 20 years later, there is a person, Mr. Evo Morales, who has 20 years old, 20 years ago, very young. But now he's a representative, and he started to say, okay, what you did here, you did a lot of bad things. So that's why there is not, like USA, for example, two parties. The opposition can be, in 5 or 10 years, a very unexpected group of people who get power because different things. In this case, Evo Morales had power because he represented a lot of rural persons in my country. And he is very wise because he changed it from a coca producer farmers to poor people representative. So I agree with you. The opposition have to they need to ask about a project, but sometimes real politics, what we call in Latin America, work in this way. Spain and Australia will be here. Okay, the dynamics is most of it. But my point with this graph is Latin America is not acting now as a bloc, like in the past. Now, in Latin America, we have some countries that are looking his own future, doing some arrangements with Asia, Europe, and USA. This is the only purpose of this graph. What we did in Bolivia, and also they do in Iguazu, I think, with the power generation. Sorry for the technique, but the selling formula has two components. One, the international oil price, and the second one, an escalation factor. This escalation factor goes up every time. So the risk is lower because you are covering the risk with a higher price. But the idea behind this agreement was not only the price, also Brazil needed our gas and we needed to sell our gas. But this is the natural gas business, where in the natural gas business you need long-term investment because you have to build the pipeline, you have to build the plants and everything. In the oil business, it's more difficult because oil is a kind of commodity. So my reflection here would be for all the people who study the natural resource course, you have to differentiate oil from natural gas. Because in the natural gas countries, the natural resource curve is not too evident because you need long-term investment. And long-term investment implies a long-term relation between the countries. And also to end the idea, in Latin America, the integration energy project started with the governments. The private companies in the past 40 years didn't sign the agreements. Are always the governments who discuss. Once the agreement is signed, then the private companies goes and start to invest. Some people say, okay, but when the government were discussing, some private legal companies were behind telling the government what to do. But there's a room for the governments in the energy integration projects in Latin America. There's a lot of them. There's one. Oh yeah, and of course I am representing myself, not the point of view of my country. In my country I have a lot of enemies, more enemies than friends, because I am an oil person, not too friendly with environmental. I am neoliberal, not too friendly with the socialists. So I am the bad guy. But as a bad guy, I say, in Latin America, we don't have to be fanatical regarding the environment, because we need to focus on the economic growth. And regarding the Yasuni-Tete, that maybe is a project that we can take, regarding the Yasuni-Tete, the main environmental problem with the oil projects is not the drilling, not always the pipeline. It's the people who goes to the oil field and started to put some houses, some things. So you can do an oil drilling process minimizing the environmental impact, especially in Ecuador. And let me tell you why Ecuador. I'm sorry for talking about Ecuador, it's not my country, but I lived there about 2 years. Ecuador imports 80% of LPG, and they have an oil field not explored. So they have to pay an international oil price for energy, and they have energy in under the ground. So what's happening? As a Ecuadorian, I will say, okay, the environmental is a good thing, but the money is a better thing. I want my oil underground. Okay? Let let me explain you my answer with an example. The pipeline in Bolivia, between Bolivia and Brazil, was administrated by two companies, Enron and Shell. Enron, as we know now, wanted to get the money in 5 years. And Shell wanted to get the money in 20 years. So not all the oil companies have the same vision. There are pirate companies who wants to get the money in 5 years. And there are companies like Petrobras, like Shell, like I would say Total Fina also, that they share a long-term vision with the country. They say we are doing business with the country, not with the government. But also we have bad companies. We have bad companies. They want to monetize the reserves in 5 or 6 years. And also Petrobras is an oil steel company. They have a private share, but the political long-term view is also geopolitical. So they say, okay, Bolivia and Brazil are in the same front. They share a border, so we are naturally partners. So Petrobras is doing some job here. So I will distinguish private companies, good and bad, and also oil estate companies, good and not too good, not to say that.
But what makes some good and some not good? Is it just by chance, or is there a structure that...
That question, I listened to this question many times. How we do a business at the end? How are the... why we do a business between two countries in the energy sector? And from my experience, I saw that is the need of internal energy supply for the big country and the need for the money from the small country. So as in Bangladesh and India, as in Bolivia and Brazil, as in Mongolia, China, and as Afghanistan, Turkmenistan, there is always the market, the rich one, and the supplier, the poor one. The poor one needs the money, and the rich one needs the resource. The black one, the small black one, here.
Yeah, Uruguay.
The small black one.
Yeah.
Uruguay is the only country. The only country because we did a perspective in Latin America. In the next 20 years, natural gas and oil will represent 70% of the energy matrix in the next 20 years. So in Latin America, we are not concerned about environmental politics. We are concerned about our pocket. Yeah. What happened with Argentina from a point of view is that they are always complaining about Argentina. What we are looking here is Argentina relative to the other countries. So relative to the other countries, Argentina is in a good position. They have a small, they from time to time fall in the economic growth, but they have a tendency, a good tendency in economic growth because from my point of view, I am not Argentinian, but they have a good industry, a good infrastructure, and now Argentina have the third biggest shale gas reserve in the world. That's why the nationalization of Repsol can explain. The recent nationalization of the previous year, you can explain it by the fact that Argentina has a lot of natural gas, the third reserve in the world. So Argentina will give us a lot of news in the future with natural gas. As I always mention in Bolivia, the main problem from Evo Morales is not the person like me, because I am a neoliberal bad guy who always appear in the press, this is the bad guy, this is the bad guy. No, I'm not the problem. The problem for Mr. Morales is the people inside his party. Because the people inside his party now is going apart, telling to the people that Evo Morales is doing business with the private oil companies. because Evo Morales, at the moment of nationalizing the hydrocarbons, didn't was not orthodox nationalization. Was more a new contract sign. Okay, so the problem is inside the political party of Evo Morales because you have a lot of factions. No? So maybe in the future the people will say, okay, Evo Morales did good because he found an equilibrium because because people like me and the social person, and maybe another people will say, okay, Evo Morales betrayed his own political ideology. He was not consistent with the basic of his ideology. But to the end, why not in my country the mining sector and the oil sector are the same? Because when the oil sector fails, you don't have LPG to cook. So the people goes to the streets. When the mining sector fails, people doesn't eat gold or silver. It's a problem of the companies, not a problem of the people. Okay. Thank you.
Thank you very much.